see if we're live, really. Guess we're live, Abby. Just trying to confirm it. Are we live? We live? I think we're live, right? We're live, right? Ladies and gentlemen, if anyone is here, please type hi. If anyone is in, please type hi. Okay. I'm not signing into this. Please, I'm coming. Okay, let's go in. Is anyone in here? Let me check. Let me be sure. Someone is in here. All right. Okay, I'm coming. Please just hold on for me. To sign in to the chat, man. Sorry, it's taking a little bit of time. Check my device again. I'm using my device now. How these people save? Come in, please. Checking my device now. Where is my device? What's wrong with this one now, Shebi? All this I'm setting now. I would have done this before. I'm just doing them now. So sorry. I have to do all this now. So sorry. On this one now. Okay. That's on now. Okay. Doesn't matter. We are here now. Is anyone here? Anyone is here? Just say hi before we get started. Hi. Okay. I don't think there is anyone here right now. We'll go ahead to break down the charts. I'm gonna go ahead to do our thing. Abi? That's what we're gonna do. Just go ahead to break down our stuff. All right, so let's go. I don't think anyone is here right now, but let me go and break it down. At least when you come here next time, you'll see the job that we did, breaking down, and then also find out that you missed. For you that are just going to watch it, and so now let me take off the camera. I'm going to do the business of the day. Let's go. I've taken a little time, so but let's see what we can do for the time we have left, man. So if anyone come in, just hi us. Just know that you are here. All right. So today we are just going to be looking at to how to break down this chart. Market will still start open in few hours. That's in around 12 a.m. We should have the market open. So, but right now we want to break down the charts, and I would have started this all over again, but okay, let me just start it. Let me just start it all over. Let's get started all over. Yes, I've deleted everything, so we'll be going to straight to daily time frame. Yeah, let's go to the daily time frame. Remember, what we want to do is to see how you can start using sniper entry to actually trade. All right, to trade this market. So right here now, we want to break it down into other blocks. So we're going to start with the closest to where the price is now. We're going to just go breaking down every other block that we have here. So, all right, for daily time frame, after a break above here and a break above here, all right, so we'll be taking this as an other block. The first one, and from my experience from the market, I'm not taking one other block here. There's going to be another other block. Let me show you exactly what I mean. Where is this? This block don't disappear. Wanted to. So let me show you exactly what I mean. You see, this is another block. So if you watch, you discover that the high, this candle take out this high. All right, making this candle another block. This is the end of the other block here, where it ended, of course. But there is another block. I know some people will take this as the only other block here that break above here and here. But I'm going to consider this as another block. I have what I usually call the invisible order block. The invisible order block, that is areas that people don't usually consider as another block, but it holds in the market as another block. During my learning experience, I was able to figure all this out, and it has been helping me in my trading journey too. All right, so what do we have? This is currently the all-time high. Let's mark it out. See, they not follow me, or you just hooking. All right, so I'm going to mark it out with black. Let me change this to black. That is the all-time high. Of course, we're waiting for market to get back there as well. So this is what we have now. This other block and this other block. From this now, the market is still bullish from the daily time frame perspective, because we have a break of structure to the upside. I call this one the first break of structure, and there's another break of structure after the test of the other block by this candle. There's a further break upward, and getting upward, we've not been able to see a clear-cut candle to observe another break of structure to the upside. So what I'm waiting for is first the retest of this other block and also the retest of this other block. All right, so there's no change of character yet. So daily time frame, we are still bullish. And according to daily time frame, let's go to 4 hours. Let's go and check out what we have in 4 hours. Let's bring this to normal. All right. Like I said, we will be considering just the other block that are closed. If not, we'll be taking this as another block too. Coming to 4 hours. Okay, let me just put it just for educational purpose. All right. So we have here, so we're going to change it to normal color of other block. This is the color code I use for 15-minute time frame. So now I just started using it for all, because we're still going to refine this to 15-minute time frame. So here we're going to adjust this so that this candle becomes the other block. All right, this candle becomes the other block here. All right. This other block, because this candle, of course, and this candle break above this particular this wicks here. All right, the wick them here. All right. So as far as the body of the candle, I take it as another block. Then this one was the break above by this candle, cluster of candles here. So I treat it as another block. Now, why here I'll be treating here as invisible order block, breaking above here. So breaking out. So I'll take this as the other block though, the candle that serves as the other block. You see that some of these things will not align with the conventional SMC trading, smart money trading, but I'm just talking about how I modified what I learned from it to suit the market conditions that I understand better in order to trade to carry out my trading beautifully well. All right. So most of the thing I will be saying will not be an island with what you already know, but that's my way of refining it to this point. All right, so coming to this place now, let's break it down. Now, this is example of invisible order block I usually talk about. All right, there's a break above this week here. So I clustered in the cluster of bullish candle here. So I found my order block here. All right, that's another order block. All right. For me, remember, I'm not saying the argumentators and people that know very well, this is what I implement in my trading strategy. So what I figured out from the traditional smart money concept, and then I apply live on charts. So I take this as invisible order block because there's a blue break above this weak rejection, which I take as a bearish move downward, even though this candle went bullish. So even though it's still bullish, but it's a bearish move down this way, all right, taking the market down. But these candles came to break above it. So I take it as a break of structure. So this becomes my order block. Just as I take here this one as a break of structure. You understand? I was supposed to take this as the order block, but I decided to put it here. I'll still refine it later. So this is a break above it. All right. So I call this invisible order blocks. That's how I trade. All right. So now when you come to this point, you now discover that here there is no clear-cut break of structure to the upside around here. So, but the same thing apply. There is no clear-cut, or rather, there is a clear-cut change of structure, change of character here, because it break below this weak rejection. I see this as a bullish move upward, and then a bullish candle formed, but another one take it down. So remember, this market was going up, mostly break of structure to the upside that we've been experiencing. So breaking below this week, I see this as a change of character to the downside. That is how I trade, and that is how I view it. In fact, when that happened, you see there was a retest of the other block, because this one becomes another block that caused the change of character. There was a retest of it. After retesting it, you see what happened. Even though there was rejection here, but after retesting it, the market moved down. For anybody that traded this market, taking profits here, is because of this, first of all, change of character here, and then retest of the other block that caused the change of character, and then since then there was a downward move here. So as far as this structure is concerned here, the weak rejection has made it to return back, but the change of character still stood. Then break of structure to the downside, change of character to the downside still stood. Break of structure to the downside was rejected and all that. So we can still consider this not really in between bearish and bullish move. In fact, we want to see what the candle does. Taking out this side to give us a change of character, because it was rejected here vehemently. All right, but change of character still holds, because look at this low. This low is on the body of this candle. I mean, break of structure, sorry, still hold. This low is at the body of this candle. Okay, let's be sure. Yeah, of the body. Even the last week here is still on the body of this candle, though very tiny, but to still consider it as the break of structure to the downside. All right. So let us wait and see if we're going to observe a change of character here. So in other words, here is still bullish 4 hour No, let's judge 4 hour as of course bullish. It's still bullish. It's still bullish. Bullish. Let's see. No, this is bearish. This is bearish because I remember this is a change of character to the downside and the break of structure to the downside. No matter though it's tiny. So it is what? Bearish. 4 hour bearish. Daily time frame bullish, 4 hours bearish. So let's go and refine 2 hours time frame. This seems to be hanging. I don't know why it's hanging. But it's not supposed to be hanging now. All right, so here let's refine this to this other block, this other block here. All right. Now there is another block here that was retested. I will still represent it. You see that I usually mark my this thing anyhow. Just mark and full everywhere, just to represent every point. Every point is significant. It comes into usefulness during decision making. Trust me. All right. All right. So yes, we take this as the other block here. This is 2 hours time frame, and then we refine this now. This other block to here. We refine it to that. Now, ladies and gentlemen, look at this is an invisible order block. I'm sure you probably find out that it's going to be order block in lower time frame. I believe so. This is considered. I consider this as invisible order block, and you can see when the market in fact, it even held the market back here. All right. So when you are waiting for the market to come down to this clear order block, this market was stopped here. That's because you didn't consider this as an order block. That's the reason why. So you go to the other block, and the other block stopped it. All right, we have refined all this. Okay, let's define this to this point. All right. So reading the structure, there was a retest, a break of structure to the upside, a retest of the other block that caused the break of structure to the upside, and then now look at this high here. This is, I consider this as a high. Do you get it? So, and this becomes a break of structure to the upside. The retest of the candle, even though this you call this normal consolidation, but I always go ahead to break them down because it helped me to make final decision. And then there was a break of structure to the upside, and this is the candle that caused the break of structure to the upside, even though it's forming consolidation. Once ever it broke above something that looks like a high, I take it. I don't take it with a pinch of salt. I read meaning into it. That's how I trade. All right, all right. So we consider a break of structure to the upside. Now see where there is a change of character. A change of character. Breaking below here. Breaking below here. So here we are not having another block. A change of character to the downside. And this is the other block that caused it. And of course, it has been retested. From what we can see, it has been retested. This is 2 hours. It has been retested. Okay. So it has been retested. After retested, what do you see? We see a break of structure to the downside. You can see, all right, breaking below here, you can see a break of structure to the downside. What would we consider as the other block that caused the break of structure to the downside? That would be this. Okay, so what I'm going to do is I'm going to differentiate these colors. This is take this. Let me take this to red because these are very shorter block that is making us to move downward. We expect market to move downward when it gets there. So let me let me differentiate them. So all right, differentiated them. These are bullish. We expect market to bounce from there and go back. And you see that market has already bounced here, going back. I would have used green to represent it, but let's leave it this way. All right, so we see what we are doing. We're trying to break this thing down to pieces in order to get what we want. So now, currently, there is a break of structure to the downside, which means that 2 hour is bearish. bearish move. That's what we have. So let's go down to one hour time frame. 1 hour time frame, what are we looking at? Let's refine this order block starting from here. Okay. All right. So refining the order block. This order block. Whether the order block has been mitigated, I don't care, because sometimes it comes and do a retest on that mitigated order block, and that is it. So this is an order block here. This broker doesn't have a gap. There's a gap in some other broker. Okay. All right. It doesn't have a gap. All right. So this one here, the other block here. All right. We're just refining it. Oh, consider this. I'm refining this to this point. This is another block, but I'm not going to represent it. We'll just leave it this general area. All right. Liquidity has been cleared here. All right. So, okay, let's come to this and refine this too. This is the other block here that will be mitigated by this candle and this candle this week. They're all mitigated. And here, now, here is the other block here. So these are bearish order block. So what do we have here? You still have a break of structure to the upside, a break of structure to the upside, and then a change of character below, breaking below here, change of character to the downside. You see a change of character to the downside. The test of the other block that caused the change of character. You see what happened? And what do we have now? The break of structure to the downside. So yet we don't have a change of character yet to the upside. So 1 hour is still bearish. Let's go to 30 minutes. Quickly, 30 minutes. 30 minutes quickly. Let's start refining from the up here. Okay. I'll take this as the other block. Other block now. This is another block that causes the change of character here. Change of character here. This is break of structure to the upside. But in this place, we now experience what? Change of character to the downside. And this is the other block that caused it. See that? And then there was a retest of the other block that caused it around here. And what do we have? Or the FVG. And what do we have? We have a break of structure to the downside. That's what we have, basically what we have here. A break of structure to the downside. And this, let's now refine here. What is happening now? It's not picking. I'm just trying to go into detail to break it down so that everyone will understand. So this is a break of structure to the downside. The character has been already changed since from here. So it's a break of structure to the downside. The break of structure to the downside. Now, here is where we have the issue. In this particular time frame, I have what is called, what I will call, for that, I'm going to remove this now, this other block here, because it's at the middle where it has. All right, so, but there is another block here. This is what I call the invisible order block. The invisible order block. All right. So what this means is this. There is a break above, because here, like I used to say, there is a bearish move downward, even though the candle closed bullishly. And then there is a bullish candle that take out the high that it created here. So what do we have now? A change of character to the upside. Now there was a nearly tested it, but did not test it. So it did not test the other block, but it started moving up. And here we are on the verge of actually having what we call as a break of structure to the upside. If that happens, we are talking about a bullish move. As the market opens today, we're going to find out what it's going to be. All right, should we refine? Let's go and refine this other blocks here, them here. Let's go and refine it. Okay, or is it okay? All right, this other block is okay here. This thing is even today. There's another block here. The break above here by this candle. There's another block here, and there's another other block here. But I'm going to leave this one together to watch it. Physically treat other block as areas where I watch the market as market is getting there to see what is going to do. I don't know what is wrong, what is happening today. I certainly having issue with moving around the mouse. Okay, certainly have issue doing so today. So we'll be considering there's another block here that take out this high here. You get so, but this one will have to be mindful of this too. So we are going to find this other block to this point. All right. All right. So let's see here. I see basically these are the region we are waiting for the market to get to. Let's just leave it a little bit far, but let's leave them. So let's go to 15 minutes, our entry time frame. Usually my entry time frame. So let me go there to 15 minutes. All right. Let's go to 15 minutes. Let's read structure here. All right. Okay. Okay. All right. So there is something here. I am going to create this at this point. At this point, I'm going to introduce resistance, resistance, resistance zone. I want to take it from this point where we have the high before Friday, putting my resistance zone here. We now discover that it cuts across basically all this area. You can see it's a proper resistance zone for now, close to the current market price. You get it? All right. So I'm going to look out if I'm going to find, because these are my conferences, you know, I am now here down in my entry time frame. I'm going to find out if I'm going to have a trend line, and I've seen one. I want to show you the trend line, and I think this trend line runs from at least from 4-hour time frame. Okay, this is the trend line hitting. Okay, this is what we have, trend line. Okay, let's have this thing. And here we're going to refine the other block here now, this time frame. This is where we have the other block here. Now this trend line, I say this trend line, like it runs from 4 hours. From what I've seen, you can see 4 hours. We see how the trend line well positioned like that. It's only in daily time frame that we don't have it for now. So these are the confluences we have. So these are the confluences we have that we're going to use to now interpret the market and define our key zones. Okay, so let's go back to the 15 minutes time frame. Define our key zones. All right, the last place that the market reached. Look at the last place that market, and that's an order block. We didn't even refine that, but just so let's see it. The last place where the market reached. You see it is another block here. All right, it's another block. The last place, that's the last low, the zone for the last low. That's it, and that's what it did last Friday. All right. All right. This is where the price is. This is the last high he made. Now, within this last high, we want to see, we're trying to define our key areas now. Our key areas we're going to consider is the all-time high. We want to see, it'll be interesting to know what market will do when it gets there. Now, the other block that causes a change of character here, I mean a break to the downside here, is what we have here. And where is the end of the other block starts here? Look at where it ends, this point. Can you notice one thing about that point? This is a zone where we have our trend line. Did you see that? Our resistance zone. Did you see that? And then our other block, the end of our other block. So we're having three confluences here, defining this zone as what we should consider as a very strong zone. So that's an interesting place we'll be looking at and be seeing, trying to figure out, to see what market is going to do when it gets there. And incidentally, markets seem to be heading to that direction. So if it beats the beginning of the other block, we want to see what it does around the trend line. You can see the market was pushed downward when the last time when the market got there. You see that? That is intersection of trend line, the other created other block there, of course, right now, and then resistance zone. But you see, it's going to here now. There is liquidity zone here along here now around this area. So now we want to be careful when market is getting here, so that not just to assume that market is going to take out this very place when it gets there back. So it is true that right here we are having. It's true that right here, I think this place is properly refined. It's true that right here we are having a zone, another block, invisible other block, like I usually call it, that have shown us a change of character to the upside. And the break of structure to the upside is in the making, as you can see from here. So the question is that how do we trade it? First of all, let me talk about, because okay, the key zone, I've talked about just two key zones. So let me go again. This is a key zone, the resistance area. This is a key zone. This region is a key zone where you have the other intersection of the other block, the trend line, and the resistance zone. That is a key area that we are watching, we'll be looking at right now. So, and market is heading there. So we are going to pay attention. Now, traditionally, how are you supposed to trade here? What you're supposed to do here is that when market get to this, get to this region, you want to watch out for a change of character to the downside. For instance, a change of character to the downside, and a retest of that change of character for you to take your trade to sell if it give you an entry trigger like bearish engulfing or shooting stars, or any combination pattern of candle that show that sellers are coming into the market. So let me take the part so that we take a part to illustrate that. We're taking it slow, but we're going to take a lot, and we're going to take more time to illustrate this. So look at what I'm talking about. The market move gradually into the zone, move gradually into the zone. There is something that is going to happen. There can be a sweep, liquidity sweep around this area. That would be a good thing if you see a liquidity sweep. After you sweep it, and then you see a combination of candlestick pattern, you get it. That would be a nice one to take risk for aggressive traders to actually make a sell. But what I would advise, to be sure that the market is coming down, but because good, now good can decide to fire up, is after it does this, you want to see a change of character. You see, it has a change of character. You see, at this point now, this point I'm pointing, if this happens, you are going to see that this is another block that causes a break of structure to the upside, making the market to get to this point. Do you get? All right. Assuming that it didn't create any break of any other block here again by doing another break of structure to the upside. Assuming that this is the only place, then you mean they are going to be patient and watch the market to come down, to do whatever you want to do, come down, do whatever you want to do, come down and break. You see, this now would mean that it has broken below this low. What do you call this? This becomes a change of character. And what do you want to do after the change of character? You want to watch and let this market visit back the other block that resulted to the change of character. So the other block is going to be around here or anywhere here, assuming he created a new other block. You understand? So it's going to be, so when you retest it and turns again and now give you an entry trigger, bearish engulfing, shooting star, or any combination pattern that show that sellers are coming to the market, that's what this we lost the audio. I don't know where we lost the audio from, but I will try to come back and explain again. So sorry if you are here and we actually lost the audio. So, but we are back with the audio, I think. Let me confirm that we are back. Are we back? Are we back with the audio? We are back with the audio. We are back with the audio, right? I think we are back with the audio. It's going to be a little bit long. This is going to be a little bit long, but we shall complete it. We are back with the audio, I guess. So let me find out. Find out. Find out. Is there anyone here? Anyone here? All right, so we're certainly back with the audio, right? So let's go ahead. Let's go ahead. Let's so now we are back with the audio. So I'm just going to repeat what I've tried to talk about here. All right, at this point, what we're talking about is that we refine this other block here. I don't know where we left off, where we lost the audio. We define the other block here, and then we have a confluence of the other block from here to here to this point, and at this point is meeting the trend line, the bearish trend line, and also the resistance zone around the areas. They're forming a very strong confluence that should be telling us that market may likely turn when it gets here. All right, but we don't take that. We need to confirm this, and that is confirm it based on the way that we trade. So this is what we're gonna do. So we said that normally what people will likely do is this. You take the market here, you see at this point now, this is potential order block that is going to cause a break of structure to the upside. That's what we have here, potential order block. All right, so now, if the market take out this high, it has been able to create a break of structure to the upside. If it does this, that create a break of structure to the upside, because this will mean that they are able to break above this high here. So a break of structure to the upside. Now, it goes into this zone where we have that's telling us that market should be pushed down. But I said, assuming it comes this way and even clear liquidity, aggressive traders may likely want to enter it. There's nothing wrong with that. All you need to do is to, after this, assuming that this is a combination pattern showing that sellers are coming to the market, like bearish engulfing or shooting star or whatever, that's what this last candle is. What you just do is just go and pick and take the market from that point. Make yourself This thing is candle close. Put your SL below the low, and what do? Target this point. This is going to be 1 to 2, quite big anyway. I don't trade like this normally. So this is 1 to 2 risk to reward ratio. I don't trade this, even though we're having 440 pips, except if the market is going to get to this point, which we expect it to do after pushing from here. So this is 1 to 4.8 risk to reward ratio. So normally, this is not a sniper entry. See, you're entering in 15 minutes time frame, most of the time you'll not be able to get sniper entry. So we're going to talk about sniper entry. Of course, I'm just giving you the general thing you need to understand here. All right, this is what you will trade. This is exactly what you will trade. All right, targeting the turning point from here. And then you'll be getting 1 to 5 risk to reward ratio. And you'll be looking at around 840 pips. All right. 1 to 5 risk to reward ratio, 1 to 5.4 risk to reward ratio. That's what you'll be getting. I think that's a good one, a good deal, right? Okay. So, but I said I would not advise you to do this, but for aggressive traders, you do it. I will require a confirmation. That's what I mean. So, what I want to happen will be this. I want to be patient because I want to be sure that the market has changed direction for and that we are not entering at the point where the market will take us out. That is the essence of this. Is now you are going to sell. It is clear now that the market has decided that I'm going down. It is down. So see, when you trade like this, you're hardly going to make a loss. That is the truth too. But you're going to take time to do your confirmation. So you are entering the market. You're also more likely to get better sniper entering, even if you are taking your entry in a 15 minutes time frame. And then target. This is which risk to reward ratio is this? This is already 1 to 5. So if you're targeting down to the turning, to the period turning point, what you are having now is 1 to 10 risk to reward ratio, a bit above 70 pip to get 780 pip. This is 1 to 10.8 risk to reward ratio that you are getting. So, but you are so sure that the market is going to go down because of the structure of the market. And there is a gap in many brokers. This broker doesn't have gap. This is Pi8 or whatever, doesn't have gap. So we expect the market to come down to this point or even come down to this point. And you can imagine if you are stretching it down to the place we expect the market to come, like let's take it from the front. This is about 1,000 plus pip. You see that? about 160,000 people. So this is exactly what you're having, about 106,000 people or 60,000 people, 160,000. I mean 106,000 people, sorry. I mean 1,060 pips, 1,060 pips. That's what I'm trying to say. About 1,060 pips. This is exactly what you can get. Did you see it? This is exactly what you can get from this point. When after this confirmation, you can be sure that market can get to this point after this confirmation. Remember, the confirmation is that you allow it as it breaks structure to the upside, you allow it to change character, you allow it to go after going everywhere. It came back to retest the other block that make it to change character, give you an entry trigger, and you take it there and fire it down. This is exactly how you trade and how you should trade from that key. So that is one leg of it. What about if this market actually refuse to, keep going up? Now, the best case scenario, let me delete all this now. If the market is breaking above, I'm going up, what do you do? What do you need to do? How should you trade it? All right, so let me just talk about this. I'll go and talk about the change, the sniper entry we're talking about. All right, don't worry, I'm going to make a special video on how to take sniper entries. I'm going to do that surely. All right, I'm going to make it and post it both on TikTok and Facebook, and what do you call it? TikTok, Facebook, YouTube, and TikTok. So I'm going to leave those videos there specifically. So, but here now, we are just looking at what we should do if the market is going above. So now, the only thing you want to do is that allow it to break above this zone. What am I talking about? When it break above this zone, allow it to return back to this zone to retest the zone. After retesting the zone, it gives you an entry trigger to go up, and then you take it. So it's almost like creating order block and returning to that order block. So what we're talking about is you see a situation where the market goes up, it breaks clear the zone. Don't leave it, even if it touches this place. So this is in terms of a buy scenario. Remember what we discussed before is a sell scenario. Even if it touches this place, you don't just leave it. Maybe it created other block around this zone. What you need to do is that allow it to turn back, to go and turn back. Assuming that here is the other block, it retested it. Now it gives you a bullish engulfing after retesting the other block for the trend line or just that zone. Give you a bullish engulfing or hammer. Just candlestick combination pattern that shows that buyers are coming to the market. What do? You take your trade here. You do your buy. Yeah, remember it break above the zone, came back and retest the other block that causes a break of structure to the upside. You get? And then what do? You will take a buy. So you just take a buy, just buy as normal now. Now put your stop loss below the low and then stretch, either target the all-time high or above the all-time high. But I will encourage you to target just the all-time high. Allow it break up above the all-time high before you begin to target beyond the all-time high. But you can still use your instinct and do that and target beyond the all-time high. All right. So that is a buying scenario we described to get along together with this. Remember, we talked about a sell scenario from this point. I think we should just talk about sell scenarios all alone first. All right. For another sell scenario, apart from the other one we described before, is a situation where this market came back. This market came back from, this is low. This is the low that created. I don't know if I talked about it before. The low it has created. If the market should go and come back to break break below it. I think I've talked about this before. You see, this is the low. So it has changed character to the downside, allow it to retest the other block that caused the change of character, and it gives you an entry trigger to go down. What do? You take a buy and target here, or go beyond here and go to that the place we talked about before. Targeting here. That's what you should do. That's what you do. You can also target here and watch the market. The market begin to do a change of character to the upside. You exit the market. You get out of the market. So you get it. That is another sell scenario. Let's talk about another sell scenario that we can be considering as well. I don't remember all the sell scenario. All right. So what we do here for another sell scenario would be a situation where the market actually go to the all-time, hit the all-time high, hit the all-time high. Are you seeing it? And then you'll be doing break of structure to the upside until it hit the all-time high. Then it comes and change character. See, change character, assuming this is it. This is the previous low, the low it created from the other block. See, break below it. Then it goes, this is change of character now. So it goes and retests that other block that caused the change of character or the high again and give you an entry trigger of bearish engulfing or complete candlestick, any pattern that shows that sellers are entering the market. Then you take a buy. You take a sell from there downward. That's what you do. That's another sell scenario. Then another sell scenario, the last sell scenario I'm going to describe before we talk about buying scenarios, will be a situation where the market actually, let's say the market comes this place, you get, break the low clearly. After breaking below it, it comes back to retest a particular order block it created. You understand? Either create other block, new order block it created, like a break of structure to the downside, keep creating a break of structure to the downside. If you return to the previous order block, all right, that caused a break of structure and give you a pattern, combination pattern that sellers are coming in, you take a sell from there, target downward. You get? All right, so that is it in various sell scenarios. What about buy scenarios? Let's talk about buy scenarios before we go to our main reason why we're actually doing that. I just want to break everything down the way we could see, the way it could be seen in the market. So let's talk about buying scenarios. Buying scenarios. First of all, the buying scenario, if you're not already in the market, you don't need to do anything yet right now. What you need to do is to see a break of structure to the upside. You see, there's no break of structure yet. We need a break of structure. Any one more candle will show a break of structure to the upside. All right. So, and a retest of the other block that caused it. For instance, now it does this and then comes back and return. Look at the other block. This will become the other cause that caused the break of structure to the upside. It returns to it. What do you do from here? As it returns to it, you want to wait for it to form a candlestick pattern showing that buyers are coming to the market, bullish engulfing, or a hammer, or anything like that that show that buyers are coming in. Then you take a buy here, target the all-time high. From here, target the all-time high, and then put your SL either below this low or below this low. That is it. So another scenario would be a situation where this market actually came back down. Buying scenario. The market, I'm trying to rush because the market comes back down and hitting here. All right. Aggressive traders, once he give you a bullish engulfing of or any candlesticks pattern that show that buyers are coming in, you can just take a buy for here and set your stop loss below here. You can target the all-time high from there, or this other block, or this zone first, whichever you want. A great deal of trade. All right, if you do that. All right, so that is one pattern when you come to a change of a break of structure, I mean a buying scenario. Another buying scenario is this. I think we have described this, a situation where the market actually break above this zone that we are watching closely to see what's going to happen. It breaks above it, returns to, especially if you create other block around it, returns to it, and then give us an entry trigger that is a buyer's entry triggers, bullish engulfing, you understand, shooting hammer, then you take your buy and place your stop loss below the low and target all-time high or above it or whatever you want to do. Now, all these scenarios I've painted out, one of them will play out. I've showed you exactly what will be happening, and then you will know what to do. Change of character, break of structure, then retest of the other block that caused either change of character or the break of structure, the particular direction. And then when it retests it and give you a bullish engulfing for a buy trade, or a bearish engulfing for a sell trade, or any candlestick pattern that is in each class that show that either sellers are coming to the market or buyers are coming to the market. So if you are buying, you have to be buying at that time. If you are selling, for sellers, you have to be selling at that particular point in time. That's all that you need. These are just the summary of what we're talking about. First of all, watch out for a break of structure or a change of character and a return to it. Now, in the situation when it did not return, just leave it. Be patient with the market. Allow the market to create a new break of structure. If you create a new break of structure and find out whether it's going to return to that new break of structure, then watch liquidity zones too. Watch liquidity zones here, just like what we are talking about here. If this place might be a situation where you will clear liquidity first before start moving down. You get it? So when there is liquidity zone, you don't just go and rush. You want to wait and see it clear liquidity before you come down. So now, let's now go and talk about now for all-time high, for the all-time high. To trade from there, you are going to allow the market to first of all break above, let it break above the all-time high. Retest the all-time high is certainly going to create something like another block. I mean, a break of structure to the upside. Allow it return to the other block that caused it. You get it before you take the trade. So if it comes bouncing here back again and give you an entry trigger to buy, then you could buy. Could buy. But remember that there is no reference point of where you're going to take profit. Taking profit above the all-time high is discretionary. So you have to use your discretion to do that. So now what I want to do now is that I want to go and show you how to actually do a sniper entry. For you to do a sniper entry when the market is reaching your key zone, what you do is that you go to 1 minute time frame. What I do is go to 1 minute time frame. I don't use 5 minutes because 5 minutes is still big. It's 1 minute time frame. And I'm going to show you something using 1 minute time frame. So let me show you. Let me delete all this now. I want to delete all this so that we can demonstrate this thing clearly. Let me delete them. All right. Let me delete them and put some. All right. So let's take this zone. Let's take this zone. Remember what they were, where the market reached last time. We're going to see how market behaved when it reached there last time. So let's take this resistance zone as well as key areas. I want to use it to describe. Remember here, we are having a trend line that is sitting here and we're having another block here. So here is a key zone. So I want to show you use this now to explain to you how to take a sniper entry so that you can apply it tomorrow. So let's go. Let me grab this eclipse. This thing is hanging. Don't hang now. We don't spend too much time already. This is, I've spent like 1 hour on this. Okay, I'm taking the eclipse. Let me put it here where the market turned. So let me go and show you something. Look at where the market turned. Okay, this is the zone that the market turned. Let's go to 1 minute time frame to locate this place that I marked out. So I'll use it to show you something. This thing is wasting time. I don't know why. I hope the voice is recording. Let me find out. Please give me 1 minute. Let me check to find out that this thing is still recording. Still recording, right? It's still recording. I hope the audio is also okay. I don't know. But let's find out. All right. So we are 1 minute time frame. Let's go to the place where we marked. Okay, this is where we marked. All right. Remember that is where the market turned back on Friday after hitting the key zone. Because this key zone, that was one other block we've been waiting for the market to get to. Now, look at, after hitting this 1 minute time frame, what did they do? How can you figure out what to do here? Now, remember that it's a key zone, which means you are expecting a reaction. Possibly, if you can get your key zone correctly, this method will be fine if you can get your key zones correctly. So now, make sure you have your strategy is able to identify your key zones, because that is the key to this. Because market can do anything anyway, but in key zones, you'll be able to identify when the market make any of this move I'm going to describe, you'll be able to get it correctly as an area of value that is expected for market to behave that way and for market to move away after doing that. All right, so now you can see, let me shift this thing. Trying to shift this thing. Then it's not trying to shift me. I wanted to remove this cycle and it's not responding. All right. All right. So after hitting it, you see there were rejections here. Did you see it? The first entry you were supposed to make, it's when this market returned back. Now, if we put the other block where the way it is, let's go to 1 minute time, 15 minute time frame and locate that other block and put it on top of that other block. Okay, it's actually on top of it. Almost on top. Put it on top. All right. I think this is great now. So let's go back to 1 minute time frame. Okay, thank God we're still here. Now, after all this happened and came back, you see this rejection here with this candle is making a higher low. After this is a higher low as it did, and this is a hammer. Did you see that? That is after bounce. Remember, this is a key zone. That is a different thing. Not anywhere that market bounce you just enter. It's a key zone. You see, taking the risk, because after you are risking, that's why you have a stop loss. After this candle happened this way, you take the market there and put directly. I'm not even talking about this low, but directly below the low, give it a little bit breathing space. This like 80 pips, which usually I don't like. I like 50 pip, 40 pip, and all that as stop loss. Now, but look at what has happened. Before we get to this point, the first point, where the market, you are having 400 and something pips, 400 and something pips with 8 pips, winning 400 and something people with 8 pips. That's what you are winning here. Let's take it to this place that look like invisible order block first. Look at this invisible order block. Take it away. What are you having? That is 470 pip. Not up to 500 pip yet, but there's no problem. You see, you are winning the market around this zone already. So, but the important thing, you see that you are sacrificing just 80 pip, let's say 90 pip, to capture 470 pips. So this is not even a great sniper entry for me. Like I said, I like using 50 pip, but this is what the market can get us right now. So did you see that? So just observing the bounce here around. It just give you a higher. But if you go to 1 minute, let's go to 15-minute time frame compared to what you'll be sacrificing. 15-minute time frame. Let's go there. That 15-minute time frame. This is the point. Now, look at what you'll be sacrificing if you are. In fact, look at what you will not even enter the market here. Look at the place you are going to enter the market now. 15-minute time frame. This is where you are going to enter the market, because that is where you give you a bullish engulfing here. And if you do this, you are going to set your stop loss here. You are having about 360 pips stop loss, 360 pip to win 470. You see the risk to reward ratio is not, assuming you want to win 470, is not up to 1:2. So you see the difference now. You see why the other one is called sniper entry. You can go to 1 minute time frame to be able to capture and make a sniper entry. 1 minute time frame. 1 minute time frame. Right. You see the difference? You see the difference? Why this you already won your trade for 430 pips? You already won your trade. 1:5 risk to reward ratio. Remember what I said? I said this one is even too big. Let me put it this way, just below the low, but still almost 70 pip too. So there's not much difference. But the point is that this is 1:5, or like now 1:6 risk to reward ratio. You are sacrificing just 60 pips to win 430 pips. You see that? Remember what I explained? Because this is your key zone, immediately the team bounced on it. It did a higher low. You take your trade from there. It can give you double bottom, like coming back again. Let me explain. It can give you double bottom. It's not just only this type it can give. Let me take that part again. Let me explain. So it comes here, let's say around here, even like this one now, it comes back to this place, and you want to start moving again, to start going up. This is double bottom, this bottom and this bottom, with a little bit of lower high. This is just one thing. Once you observe this kind of thing, forget it. As far as you correctly mark the key area, you understand? Correctly mark the key area. You don't have anything to be afraid of. Take your trade and put your stop loss just below the low. Get it? I'm just showing you different ways it can happen. Double bottom, higher low. You get it? Higher low, double bottom. That is it. Head and shoulder bottom. Those are the things they can give you here. But you see, when you catch it here, you are catching it very early. You are catching it very what? Very, very early, compared to when you want to catch it in your 15 minutes time frame, except you set pending order. Of course, pending order, you know the reason why pending order, the disadvantage of pending order is that you won't know if it's going to take it out or not. So if you take it out, of course it takes it out, but it's all about taking a risk. But like using confirmation, once you have something like this, you have observe any of these things that I've just said, and you take your trade. You don't be afraid. As far as you are sure that you know how to mark out key zones, that is the only important thing. Once you mark it out, forget it. The trade is going to go. Let me show you. I didn't prepare to show you with the previous trade that I've taken. Now look at this place. Look at this place. And you notice something. You see, when the market is doing break of structure to the upside, you see here, it simply retested this. This is what I used to tell you guys about order block. You see, this is another block. It retested it, and since then it has been what? Going up. But that's not what I want to show you. What I want to show you is this. You see, when the market came back here, it's doing break of structure to the upside, come back, retest the other block that caused it, break of structure to the upside. Now it came back here, retest the other block that caused it. Did you see it? And it came back down again. It didn't go. And then you see, after giving this candle, you can take your trade, and it's going to be sniper entering as against taking it in higher time frame and then getting a very big candle and getting a very big stop loss. Did you see that? So the same thing, after it came back to retest here again, you see what happened? When this happened, when it came back here, you see, if you take it from this candle or even from this candle here, after this rejection, after seeing all these things happen, this is an example of patterns you need to practice actually. Learn these things and go and practice a lot. From live market and observe very well. Take time to watch the candles as you design your zones, and this thing will begin to stick. You know the kind of move that will happen, and you know, yes, it's about to go, and you just take it. So when all these patterns begin to repeat here, you already know that any of these places that you take the trade, you are still going to win it, because look at where the trade went to, this top, like that. So sniper entry is best when you first of all design your key zone. When market is going to that, reaching that key zone, go to 1 minute time frame to go and wait and watch and see it begin to do all this turning pattern. I've told you, doing higher low or double bottom or head and shoulder bottom, or some chart pattern that just shows that market is going up or the market is going now down, depending on whether you are buying or selling, and you just take the trade there, you are going to have what we call a sniper entry, because there will be no other time frame that you can enter the market and get it that way. Even pending order, a lot of times you don't really get it like that, because except the one you get it by just kissing that zone and then taking off. If not, you'll still never be able to get sniper entry if you do not do this. So the video is getting too long, so I'm going to stop here because we're over 1 hour in this video, and I'm going to make a video that I'm going to post on YouTube, TikTok, and Facebook, where we're going to do detailed analysis and examples of how to take sniper entry. But for tomorrow, I mean, very soon market will be opening by 12 p.m. All you need to do now is go to the zone. When the market is getting to this zone where we marked out, the way we marked it out before, just go back to this video, watch them and see them again and relook at them before market open. And then you will discover that you want to observe and see if the market get to this place now, because what we have here now is that if the market is getting to this zone now, I'm going to go and watch this market here and see it. If it's going to turn, that is without even giving me a break of structure or change of character. If it's going to turn along this zone, I am going to figure it out and know. At most, what I will do will be that I can leave it to give me a change of character in lower time frame. It's still going to be a sniper entry, because if you look at this point, assuming I'm taking this trade here, I have watched it return, do a break of structure and return to it, a break of structure to the upside, it returned to the other block. Look at the other block that caused it. You see it here, return to the other block that caused it. You get it. Taking this trade here, this is just matter of it retested. That's why I say sometimes when other block is mitigated, market can come back to me to still retest it again. Now it came to retest it here. I can enter the market any of this place, and any of these places would have been a very good sniper entry. Let me take this, my favorite that I'm seeing here. Look at this. Look at this. I take the trade here, for instance. I'm putting my stop loss below this, the week. What am I going to be getting? If I go all the way, I'm getting 1 to 14 risk to reward ratio. Did you see it? 1 to 14. I'm sacrificing just 10 pips to get 140 pips. You can see that 1 to 14. 1 to 14. So, okay, let me take it to this place. This place I get higher stop loss. Look at this place. I take it the week here. What am I getting? 1 to 7 risk to reward ratio. 1 to 7 risk to reward. So these are high risk to reward ratios. So this is how to get sniper entry. Like I said, I'm going to make videos that are going to come back, you get, and actually make the video about sniper entries, and I'm going to post them with more examples. You get. So stay tuned and stay connected and wait such videos because they will be coming. All right. So, all right. I will see you in another time when I come live. For now, to be bye from me. I wish you all the best as the market comes to open. As the market is going to open soon, as you trade and apply all these things that I've discussed here. Remember, it does not just apply for tomorrow's market that is opening soon. It applied for even from the week onward. You should be able to do to use this method to trade your market and with a good risk to reward ratio like that, and also with peace of mind. All right. The other time when I come to you with live analysis like this, remember the video is long because I have to recap. I've already made the video and posted on TikTok. I just wanted to come here and talk about the sniper entry, but I have to talk about all the entries we're expecting today, all the scenarios, buying and selling sell scenarios. And if you all you need to do is to observe which one is playing out and you take it, because I always tell you what you should do. A break of structure in the test of other blood I call the break of structure, or a break of or new break of structure. It didn't retest the older one, it retested the new one. You still see the same thing. Once you retest it and it give you an anti-trigger, bullish engulfing, bearish engulfing, take the trade, and then you see what is going to happen. You're going to certainly win the trade. Remember, the key thing is marking your key zones, have your confluences, and then you see the market will do you good. All right, see you. Bye bye.